sharing only. If you need more details, please make an appointment to see us to understand your risk profile before you do any investments. Okay. And then this is our current month promotion, National Day promotion, which is our Smart Card facility, where you can get 5.8% from 1st of August to 31st of August. If you're interested, please make an appointment to see us so that we can actually run through the promotion details with you. Okay. And then before we start, we'll go through the benefits of investing into unit trust. Okay, it is unit trust investment is professionally managed. The entry cost is actually quite reasonable, and the cost is low, and you offer you diversification, dollar cost averaging, as well as liquidity. Okay, and then you can also look at advisory services where you can speak to an advisor to work out a portfolio that is suitable for you. We help customers to invest in cash, CPF, OA, SA, and SRS investments. Okay, and then our investment policy is to actually look at your investment profile and your risk so that we can customize a portfolio that is most suitable for you, and then something that is within your comfort zone as well, and the investment amount, as well as we also give you the online access in case you want to view your account. You can start as small as a 5,000 investment for the advisory services. Okay, and these are the fees that we have for the advisory services. Okay, and then this is my contact point, Susan from the Raffles Place branch. Okay, I've been with the company for 12 years. I've been in this industry for more than 20 years. Okay, so after I do this introduction, I will hand over to Yin Xian. So Yin Xian, over to you. I'll stop share now.
Thank you, Susan. Let me share my slides for the day. Susan, can you see my slides?
Can. So instead, we will let you do the presentation first. So if the audience has any questions, they can post it later after you finish your presentation. Is that okay?
Oh, yeah, sure, that's fine.
Okay, thanks. Okay, over to you.
Thank you. So hi everyone. Good afternoon. Oops. A very warm welcome. Thank you for taking the time to log on to today's webinar. So today we'll touch on the outlook for Japan, and also to uncover what exactly is the outlook going forward with the topics, surging to a 33-year high. So first and foremost, let me just do a brief introduction on who we are, Nikko Asset Management, and then I'll go on to the market outlook for Japan, and then I'll speak on one of our Japan fund, which is our flagship fund here at Nikko AM. Okay, so Nikko AM, I'm not sure how many of you have heard of, but let me just do a really quick introduction. So you can see here under asset management, and we are about 209.4 billion US dollars. So we are actually one of Asia's largest asset manager. We have employees all around the world. We are headquartered in Japan, with Singapore offices being the largest office outside of Japan. We have about 140 people here in the office. So we very much pride ourselves as a global citizen with Asian DNA. We have regional office all around the world, and Asian part of our business is actually very core. So we have fund managers sitting here in Singapore. They cover the funds like our Singapore equity funds, Asian equity, Asian fixed income, and multi-asset funds right here. So a very key part of our business sits here in Singapore. So as you can see from the slide as well, we do have a very strong commitment to ESG as well. ESG is something quite trendy these days, and we have been a signatory to a lot of UN principles and a commitment to ESG requirements for many years. Okay, so this is a quick brief introduction on who we are. So moving on, we are going to take a look, talk about the Japan outlook. So let me share some outlook on Japan market. As you can see from the slide, Japan has been the best performer in first half of the year 2023 among some of the major asset classes indicated here in the chart below. So the broad market topic index was one of the biggest winner. And among all the major asset classes you see on the chart itself, that includes the stocks, the bonds, and the commodities indices. So one of the things that unfolded in the first half of this year globally was, of course, the Fed continuing to raise rates in the US, although at a slower rate. But that was one of the many reasons the technology stocks came back globally. In the US, the stocks were clearly driven by the technology sector and actually a handful of the large cap technology stocks. However, on the other hand, we saw the Japanese market in the first half of this year was healthy based on the broad-based market return, but was nowhere near as concentrated as the US. That being said, global investors rushed into the Japanese market, so it drove much large cap stock with liquidity much higher. And however, from the value and growth perspective wise, the style effect were more or less muted over the past 6 months. So moving on, here is us looking back at the Japanese market. So with the Topix index now at a 33-year high, what's moving forward? So looking back in 1979 on the chart, you can see in the headline that the market currently is in a post-bubble high, highest level in 33. We had the bubble burst in early 1990 in Japan, and since then, the market has been moving sideways range, bound between about 1,000 to 2,000. And during this period, this is what we call the deflationary period. The Topix index is trading about between 1,000 and 2,000. And recently, it has surpassed the 2,000 level, as you can see. And you can see that in a minute, Japan is finally getting out of the deflationary period, which I guess for many years, Japan has always been a deflationary period, is finally getting out of it. And we think that the market is pricing in the positive changes that are happening in the country. And markets are often, short-term orientated. It's not going to go up, honestly, in a straight line effect. But what we believe is that there's a good chance that the market will eventually surpass the bubble period in the coming years. So during the pandemic, one of the things that are expected to drive consumption is forced savings. So household has lots of pent-up demand stemming from the pandemic. So as you can see from the chart, on the left-hand side chart, difference between the pre-COVID savings and the actual savings. You can see the trend line, which is the dotted line, indicated by the dotted line. We estimate that the consumption spending that would have happened if not for the pandemic is to be about 50 trillion Japanese yen. And that would account for about 9% of the GDP of Japan. And that would drive consumption going forward, given a pent-up demand from the pandemic. And the other thing that will actually support such consumption is actually the wage growth. So as you guys would have known that, in Japan, getting a wage increase, it's almost quite impossible. Like I've heard people saying that, getting a wage increase is not very possible and probably maybe they don't have any wage increase in the last 10 years. But on the right-hand side, you can see things have started to change. You can see that the wage growth situation over the past decade has actually spiked up currently now. This year, so during the spring wage negotiation, which happens every year, which is called the Shunto in Japan, we actually saw a huge jump in the wage. The wage hike reached a highest level in 30 years, and that accounts to about 3.9% of wage hike. So you can tell that they are really getting out of the deflationary situation. So as for inflation, although it's not nearly as high as in the US or in the Europe, We have also seen rising prices in Japan, driven by higher commodity prices and currency weakness. But Prime Minister Kishida has been calling for higher wages in a new form of capitalization agenda. Considers that wage hike is actually really important and critical to promote a virtuous cycle of growth and distribution. That being said, the labor union in Japan is also becoming very aggressive in calling for higher wages given the inflation situation. And in the end, companies responded with the highest level of wage hike in decades, which you can see, 3.9%, which clearly will be positive for the overall economy and long-term investors in Japan. One more thing that's expected to boost the economy is the recovery of inbound tourism in Japan. So, as you guys would have known that, government in Japan lifted all COVID-related border control measures effective this spring, April 29, as you can see on the chart on the deck. So, the Japanese government has actually been very conservative, taking a cautious approach when it comes to COVID. But one of the main reasons is that they actually had election last year, and senior citizens who are more concerned about their health were against the idea of completely removing COVID restrictions, and senior citizens have a high turnout in the elections. So government had to wait to take that approach until this spring, when they fully lifted all COVID-related border measures. So the number of tourists and then gained momentum the past quarter when the government lifted all related measures. So you can see on the chart on the left-hand side, in pre-pandemic in 2019, we are actually seeing an inflow of number of tourists annually, about 31.9. That's about 32 million visitors visiting Japan, spending about 4.8 trillion Japanese yen. They boost the economy by 0.9%. And currently now, as you guys know, the Japanese yen is at all-time weakness. So it's also driving people to spend, which is a huge bargain for tourists who are visiting their country. So Japanese yen is trading about 110 to $1 in 2019. But then now, I've just checked, it's about 145. So it's a huge bargain for tourists. And while we are seeing a huge recovery to the inbound tourism in Japan, there's also one country that has yet to come back, and that's China. So Japan actually removed all its restriction, border controls this year in April, but then China hasn't, and group tours weren't allowed yet in Japan. And that being said, China actually accounts for about a third of the inbound tourists in Japan and 37% of spending by tourists pre-COVID. So it's likely that the inbound spending will gain momentum when they come back. So it's a matter of time. So we're not just talking about recovery here, but also further growth in the tourism industry. So we are quite certain that the inbound tourism will be one of the key drivers of economic growth in Japan. Moving on, so another thing that drives the market in the past quarter was also the Bank of Japan's policy. So that happened in April as well. So they had a change of governor in April, and that is Mr. Ueda. So he stated that there is no change to the monetary policy. So, which was actually a huge relief for the investors, as the market has been concerned about a potential change to the policy. So on the left-hand side chart, you can see the trim year-on-year change in the CPI, which is the Consumer Price Index, Japan versus US, while the US is seeing an inflation coming down after the rate hike. Japan is seeing the inflation staying at about 3%. So BOJ is also maintaining its negative interest rate policy at the moment. So the negative, the positive, the benefits of monetary easing kind of outweigh the side effects. And one of the side effects cited is actually the weak currency rate. So let's talk about the rate for the Japanese yen. Where do we stand? So weakness in Japanese yen. Japanese yen showed the largest depreciation among all major currencies since 2022. So this data is as of end of June 2023. So you can see from the chart, wow, Japanese yen is one of the major currency that has declined, the one of the major ones. And you know, it's just seriously undervalued currently now, which is what you can see also on the right hand side against the PPP, which is the purchasing power parity, by about 30%. So people heading to Japan right now, if you guys are thinking about it, it's actually things will be cheaper in Japan currently because of our strong currency against theirs. So we have some data here, returns for the MSCI World Topics Index in US dollar terms as well as yen terms. And this is since 2019. So we can see that the Topics Index in yen terms is outpacing the MSCI World. The Topics Index in yen terms is in the light green line, as you can see on the chart. So it's outpacing the MSCI World since the beginning of the year. And the dollar-based return topics is still lowly dragged down by the currency weakness. So our global economist estimates that the Japanese yen estimates our Japanese yen to be higher in the coming quarters on the back of the shrinking interest rate differential, and of course recovering of exports. Exports are recovering, and we can expect to see a dollar-based index recovering from here. One more thing that actually caught our attention by many global investors this year is the unprecedented move by the stock exchange, which is the Tokyo Stock Exchange back in March. So there is a new guidance by the Tokyo Stock Exchange to drive companies to improve their corporate governance. And the Tokyo Stock Exchange also calls for actions to focus on cost of capital and stock price. So what that means would be to say that the Tokyo Stock Exchange reforms are starting to accelerate. So in this year, March 2023, it took an unprecedented move by calling on companies listed to draft specific plans to focus to enhance shareholder value, which is important. It calls for company to look into their financial strategy, their share price, their valuation, and specifically their cost of capital to ensure that everything was satisfactory. We believe that this is not a one-off event, and in our view, we are expected to ensure that the companies engage with the shareholders to continue to improve their financial strategy on an ongoing basis. So this is one of the key action which the Tokyo Stock Exchange has called on earlier this year. Moving on, so many of you would have known that the corporate governance reform has been going on for actually several years. So you can see underneath the slide, you can see in 2014, they introduced the Introduction of Stewardship Code. 2015, they came up with the Corporate Governance Code. In 2022, TSE had a market reform. And then this year in March, they call for further action, which I've just mentioned, to focus on enhancing shareholder value. So companies has been put more pressure to improve corporate governance practices to avoid being demoted or delisted. So this year, the new guidance is expected to have an impact on companies' management plans on an ongoing basis. So like I mentioned, this might not be a one-off event. Hopefully, it will have a lasting effect on the companies. So companies will not only be required to come up with better financial strategies to keep track and disclose and engage with shareholders, and also to update them on an ongoing basis. So what really key objective here is actually for the listed companies to enhance the shareholder value. And while the Tokyo Stock Exchange does not specifically state that they are targeting companies trading below book value, but it's clear that these companies, these are the companies that they think they should make an effort to at least raise their share prices above their liquidation value. So right now, as you can see on the chart on the right, half of the companies, as you can see on the right-hand side, are trading below book value, and the pressure is on for these companies as there are plenty of low-hanging fruits for investor. So we would think that this is a great move for the Tokyo Stock Exchange, and we expect that this would result in higher transparency and better capital allocation, which will benefit all investors in Japan in the long term. Next slide. So next slide. All investors, including shareholders activists. So Japan is actually finally ready for shareholders engagement, like I mentioned. So all investors, including shareholder activists, in our view, there's no better time right now to be an activist. Because companies right now in Japan are becoming more receptive to the idea of shareholders engagement and listening to actually what shareholders have to say. So Japan has come a long way from driving out vocal and hostile investors in the early 2000s, and they can serve as a catalyst for companies to change as they put more pressures on companies to improve on corporate practices and capital efficiency. And we can clearly see this trend on the left. On the left-hand side, we see a significant growth in the number of activists over the past decade. In 2014, we only had 8. Fast forward, we have now over 60. So we have about 68 in 2022 actively pursuing their agenda, from, getting higher dividend buybacks to board diversity, business strategy, financial strategy, and operations, and so on and so forth. One more thing to note is that until the start of the millennium, it was in a company's interest to hold the AGM, which is the annual general meeting, on the same day as everyone else. You can see on the trend on the right-hand side. So before the millennium, before 2000, companies didn't want to be bothered by shareholders, so they all held shareholders meeting on the same day. But this number has been falling since, given that the companies have been requested by shareholders by stock exchange to hold shareholders meeting on a different day, and as a result, there's more time to be spent on discussion between the management and shareholders. And so at the AGM, which is expected to benefit shareholders, and this also means that management team will have to work harder to satisfy the needs of shareholders, and a lot more times by dividend buybacks and stock buybacks. So one questions which we often get is valuation still reasonable? And where do we see opportunities in? So we often get a question there, right? So on the left-hand side, we have this chart which shows the topics price to earnings and price to book. So valuation is still reasonable currently. Both are trading at or below historical median. So we can see that the green line, which is the price to book, as you can see from the chart, and the orange line indicates the price to earnings. We can see that on the right-hand side, at 1.4, the axis, which is in line with the historical median, the price to book is slightly on the low side at 15 times. And there are plenty of companies currently now, which is like what we mentioned in the earlier slides, are at low valuation at the moment. So I would say that there's still opportunities in the value space. So right-hand side, we can see how much more overseas investors could potentially buy Japanese equities. The light green line, which shows the cumulative purchase by overseas investors, you can see that the line was moving very, very quickly in the year 2013 and 2014. And that is the Abenomics rally. This is when overseas investors collectively bought about 20 trillion yen of Japanese equities. And at this time around, net inflows has been around 5 trillion, which is slightly higher, and it's a fraction of what the overseas investors bought actually a decade ago. So we think that there's a lot more money potentially to be allocated to Japan. So what usually our clients actually look at, we are pretty much focused on dividend yield and dividend growth itself. So another thing that I want to touch on is the increasing focus, like I mentioned, on dividends in the Japanese market. So for Japanese investor that actually needs income, higher dividend stocks have been quite attractive due to the low interest rate environment. So given the increase in the level of dividends and the awareness by companies to distribute more to the shareholders, we are increasingly seeing investors buying high dividend stocks, not just for their own income gain, but also for capital gains. So what is worth noting today is that we're seeing more companies in Japan that actually effectively put a floor on dividend payments, which they think that it's important in a period of economic uncertainty, which actually gives clients a good passive income and steady income stream. So traditionally also that companies with a payout ratio could cut dividends by a sizable amount if their earnings decline. But then companies with more progressive dividend targets, which are increasingly found in trading company space, they can either increase or maintain their dividend payments, which remove the downside risk on dividends for investors. So we think that it's becoming more interesting to invest in the Japanese markets with a focus on dividends, as dividend signals, confidence in earnings and improvement in governance, and also it also signals a management confidence of earnings and a commitment to shareholders for sure, which gives us a clue in identifying opportunities here. So these are some of the key takeaways that I have spoke on the past few slides. So just to cover the takeaways that we have, so fundamentally speaking in the economy, we have the COVID recovery and the inbound tourism for Japan itself. Well, there's a delayed reopening effect this year, but I would think that the delay operating effect is going to drive the economy really well because everyone loves to go to Japan. And with the yen currently now at its lowest, spending would be huge there, which I suppose, and yeah, so thinking that second half of the year will be more likely to be driven by the Chinese tourists. And we also have the corporate governance reform gaining more momentum, given a request by the Tokyo Stock Exchange earlier this year to do some of the reforms, some of the reforms that we think that it's not a one-time event. We think that it has a lasting effect, which will benefit dividends and value stocks. Attractive valuations, yes. So there's quite a significant amount of value stocks that remain unlocked for sure, which are undervalued. So we like to focus on dividends and value stocks, and especially given that these are the value stocks which remain undervalued, we see a huge opportunities in there. So yeah, we think that valuation is still pretty low at this point. So finally, we think that Japan it's a under-researched market, and we think that it makes sense to stay active in the Japanese market given that it continues to be an under-researched market. So these are some of our key takeaways for the past few slides, which I have been talking about. And moving on, we are going on to section 3 of the fund. So we're going to talk on the fund characteristics and what the fund managers, how the fund managers actually pick to actually generate returns. So this is one of our flagship fund here in Nikko AM as well. So I just want to put it out there. This fund pays dividend, and it pays a monthly distribution of 5 to 7%, as mentioned on the slide. It is paid out monthly. So our fund manager manages this fund through a combination of dividend yield and capital appreciation to achieve the returns. So what this fund actually focuses on is it focuses on identifying Japanese companies, so with high quality management that has high sustainable dividend growth and can definitely generate potential cash generation to achieve the dividend strategy to actually pay out to our clients. So the fund itself, the portfolio itself, it's we have about 50 stocks in there, and this is a single country stocks which is only investing in the Japan market. Moving on, we can see the fund performance as of 30th June 2023. This can be found on our fact sheets. It is posted online since inception. So year to date as at 31st of July, I just got the numbers. We are performing as at year to date is about 16.55%. So moving on, we have the top 5 fund holdings that you can see here. So like I mentioned just now, this country allocation is a single country. We have about 94.3% in the Japan space and 5.7% in the cash and derivatives. And this is as of 30th June 2023. And for sector allocation wise, we are quite heavily weighted in the industrials and financials itself. So you can see on the sector allocation, industrial, financials, and materials. So the top 5 holdings shows that. So we are, the first one is the MUFG, which is the bank. And then we have Toyota Motor, Toyota Tsusho, Honda, Tokyo Marine. I am sure these companies are not so unfamiliar for you guys. They're quite familiar. They are big companies here in Japan. And these are the fund details of the share classes which you guys can invest in. So we have the CPF approved share classes, which is the SGD Hatch, SGD. We have the SRS as well, which you can use, or the RSP, and of course cash. So the management fee here is at 1.5%. Minimum investment is 1,000. Subsequently, is $100. So fund currency is in base currency is in JPY. Yeah, so just want to highlight that it's a monthly potential distribution of 5 to 7% per annum. So this shows the fund monthly distribution chart, which you can see we have been paying out to our client monthly. This is just for your noting. And of course, we have this page to actually share with everyone that who is this fund suitable for. This fund is suitable for investors who seek to achieve a total return on capital growth and income over the medium to long term, from investment equity traded on the TSE. And be mindful that you are willing to accept that your principal will be at risk. And definitely please speak to your advisor to find out if this fund is suitable for you before you invest. And of course, these are the key risks associated with the fund. So just to note that, which we need to highlight to you. So you can also find out more about it. We did not share all of it here. You can find out more about it on the prospectus and of course the product highlight sheet, which can be found on our website. Just to summarize, so besides this fund that we have, the Japan Dividend Equity Fund, we have more of other funds as well on our at Nikko AM, which you can speak to your advisors more if you like to find out. So I just want to highlight that we not only have one fund, but we have more funds on our company. So just to summarize really quickly, so valuations are still cheap. So yen is at an all-time low. So country has reopened and influx of inbound tourism. And corporate reform is also something that we continue to see ongoing. And the importance of paying out dividends is also what the Japanese companies are quite focused on these days. And how our fund is in line. So we're paid out 5 to 7% monthly. So yeah, that concludes the end of my presentation. So just want to share this disclaimer. Thank you.
Thank you, Yi-Chen, for the sharing. And then for this investment in Philip, we have many types of funds. Okay, so Nikko AM is one of the partners that we work with, and we also have this is one of the tactical approach that we will also advise our customer to construct in their portfolio. Okay, so if you want to find out more details, make an appointment to see us to understand your risk before you do an investment portfolio. Okay, Yi-Chen, I think there's a question. The customer wants to find out.
I think she wanted to find out on the fund info. Is this the slide? Fund info. I guess this is the fund info, right? It's the fund details.
Right. There's many different classes. It depends on what kind of risk you're looking at. Yeah. And then your investment mode, is it either cash, SRS, or CPF? Yeah.
Yes.
Yes, before you do investment make an investment decision. Yeah.
Yeah, I hope this is the fund info that you're talking about. So we have like 5 different share classes. So you can also find out on our fund fact sheet. This will be posted on our fund fact sheet as well.
Is it? There's a question.
Let me have a look.
Can you see?
SGD hedge and our SGD. Are you referring? Oh, it's one of it. Oh, can I also mention that this fund itself has no benchmark, so we are not benchmarked onto any. We are not comparing our funds to any of the benchmark. But you know, for the fund managers to this one, it's takes into account reinvested. This is already the one that you're seeing below is with charges, so that one is already after the charges. Did I answer that? So I wanted to say this is an absolute return fund. So there is no benchmark per se. There's no we are not comparing our classes with any of the benchmark.
Okay, you see there's a question. It's is the performance slide, there's a big difference between the SGD hedge and the Sing dollar. So is it because of the currency fluctuation?
Yes, it is for sure because we are hedged. The SGD hedge is hedged against the Japanese yen because the base currency is actually Japanese yen.
Yeah. So that's why we mentioned that, you know, for this fund, right, you're looking at capital growth and you can accept the risk in case the principal is affected. We did mention in the earlier slides. So this is when you invest in this fund, there is this currency fluctuation, something that you have to take account of. Okay. And then the fees is also net of fees already, right? As Yunshen mentioned here. What's the difference between those two SGD funds? One is hedged and one is unhedged. That means it will directly be following the performance of Japanese kind of investment. You will take direct exposure of the yen. I hope I answered your question.
That's correct. That's correct. Yes, the hedge class is the one that has been hedged against the Japanese yen. SGD, the one that's SGD, of course, you take into account the exposure to the Japanese yen. Yep.
But as Isha has mentioned, if you want to take on the low valuation and the growth potential in the Japanese market, this will be a good time for you to invest, you know. With the change
I would say that yes, definitely, because Japan currently now is the talk of the town. Like I mentioned, Japan itself is quite undervalued and under research market. So yeah, I would think that now is a good time to actually look into that. But definitely take into account the risk, because it's a single country allocation. So you definitely need to diversify. Diversification is very, very important, which I would like to highlight here. So yeah, of course, like everyone mentioned, right? Do not put all your eggs in one basket. So definitely diversification is one of the key. Yeah.
And also when you do the investments, right, Nico has any other funds as well, which is something like a very low risk, you know, for investors who do not want to take too much risk, or they can just put you know, some portion of their money into the Nikko AM Japan Dividend Fund and some into the low risk fund. You want to show the slide where you have all the different funds. You know, some of the funds may be lower risk, like the short-term bond, the fixed income type, you know, or the multi-assets. Because here they really mentioned they have the defensive, growth, tactical, fixed income, and multi-assets. Do speak to us, make an appointment to see us so that to find out your risks, and then how can you construct a portfolio? You know, in this kind of market, you will be good to work with an advisor to understand more. and what is good for you to invest, because regularly we do work with the fund house and arrange this kind of webinars to educate our customers as well. We'll wait a while for another 5 minutes to see any more questions from the audience, you know.
I just want to highlight
Yixian, you're muted.
sorry. Yeah, it's not 5 different funds, it's actually 5 different share classes. You can choose the share classes that you are the most comfortable with. Yes, they are all hedge classes. They are all let me just go back to the
slide.
sorry. Yeah, let me just go back to the slide quickly. Actually, the Japan Dividend Equity SGD Hedge B class is actually for our Insti client. So you guys should be looking at the SGD Hedge, just the first column, this one. This is our most popular share class, which most of our investors are bought in. So this is the one. These are not the 5 funds, but these are actually the different share classes. Yes, that's right.
Yeah, for institution investor, we
Correct,
need
correct.
1 million
Yes.
investment. Retail investor, you can start with just 1,000. So it's a
Correct.
different
Yes.
investment. Correct, totally.
That is right. That is right. Yes. Don't want to confuse you. Maybe I should remove that the next time. Yeah, that's right. That's right. Susan, you are right. Yes, that's right. Yeah. Because you can see the minimum investment is actually 1 million. Yeah. Yeah. So this is for, yeah, that's right. Susan, no problem. You can always gather their feedback and, any thoughts whenever after the webinar as well, then we can follow up from there.
Sure. Yeah. Okay. Is there any more questions from the audience which we can address here? Okay, if we have answered all your questions, we're going to end off this webinar here. And I hope you guys have enjoyed the session today. Thank you for attending. Okay, have a nice afternoon. Thank you. Thank you so much for attending. Have a nice day. Bye-bye.
Thank you. Bye-bye.
I'm ending. Bye.